So I was actually planning a different show today, and then what happens is craziness as usual in the markets lately. We get more Repo Madness, a surprise announcement from the New York Fed. So at around 3 p.m. today, the New York Fed sent out the tweet that you can see on your screen that, quote, "We've updated schedule of repos for current monthly period. We've increased amount offered in overnight repos to at least 120 billion. I believe the number was 75 billion. It was supposed to be overnight. Starting tomorrow, Thursday, October 24th, the amount offered for term repos scheduled for Thursday, October 24th and Tuesday, October 29th will increase to at least 45 billion. So I believe that was 35 billion, I think was the original number. So Repo Madness just keeps growing in size. It's gone from overnight repos of smaller amounts up to at least 75 billion. So there's been a couple changes already to the size of Repo Madness. And if you follow Danielle DiMartino Booth on Twitter, she was sending out articles in the last couple days, and Zero Hedge has been covering this as well, that on Tuesday, there was actually a 5.5 times oversubscription to the Repo Madness, I believe. So there was a massive oversubscription. The operation was 5.5 times oversubscribed to the first two permanent open market operations conducted last week, when operations were 4.3 times and 4.8 times oversubscribed. So the amount of repos is not going down like the Fed anticipated, and the dollar liquidity turmoil is returning. So the last couple days, there's been oversubscriptions in the repo market. The dollar is starting to react to this. The dollar is now below 98. It's at 97.46 on the dollar index. So the dollar is starting to react to this. But craziness in the repo market continues. Meanwhile, the Federal Reserve promised us, when we first became publicly aware of Repo Madness, it broke on the Twitter wire, which is a news, I call it the modern day version of the old news wire. It's the Twitter wire. It broke then late Tuesday night, I believe, September 16th, and all the articles started coming out on September 17th. All these mainstream professional money managers on Wall Street, all these PhD economists, either who used to work at the Federal Reserve or who worked on Wall Street or who worked at hedge funds, assured us that it was no big deal, that repos were only overnight, that the Fed's balance sheet would not increase, and then the amount of overnight repos that the Fed was offering kept increasing. I believe it's increased a couple times to tens of billions, up to 75 billion at least, and now it's over 120 billion. That's 3 times. And then they started adding term repos of 14 days. I think now there's a 15-day term repo, and they tried telling us that these 14-day term repos would not add to the balance sheet. Meanwhile, Danielle DiMartino Booth was saying that it would add to the balance sheet, and here we are 6 weeks later. We're waiting for the new update to come out either late night tomorrow. Most likely tomorrow, we will get the official Federal Reserve balance sheet update. And I would be pretty surprised if the official Federal Reserve balance sheet update was not substantially larger than the increase of the last 6 weeks of about $6 billion, if it wasn't substantially larger, because not only do we have term repos that a lot of these term repos too, and I've been posing the question to a lot of financial professionals on Twitter about this, that the term repos, they were telling us that the term repos, once they expire in 14 days, that's it. The banks and the other counterparties that are taking these repos don't need the liquidity anymore. That's what they're telling us. That's the official narrative. The reality is that these term repos keep being extended, or the Fed is buying these things back. So not QE for forever. The Not QE program started on October 15th. The Not QE program is going to keep increasing. We have Elizabeth Warren trying to blame JP Morgan for all the repo stuff, when in reality, it's a lot of these banks. I was trying to tell the story of David McElvaney on McElvaney Financial Commentary. He talked about how Bank of New York Mellon was taking money market funds after, I think, JP Morgan was kicked out of that. I think the Bank of New York Mellon became the custodian of a lot of money market funds, of the repo market, and of parts of the repo market. And what they did was they took money market capital and they gave it to hedge funds, and hedge funds then levered it up for returns. So more craziness from Repo Madness. A lot of, if you go back and check the stuff that these government PhD economists, that these financial professionals, mainstream financial professionals on Wall Street, that these talking heads on the mainstream financial media told us was true about the repo market and expected us to believe, here we are over a month later, and a lot of the stuff they said would not happen has happened. So the New York Fed, it's getting just laughable at this point. It's getting just ridiculously dystopian and laughable. I should probably do another crazy parody commercial about this because, I mean, we've just gone into permanent open market operations, or POMO, at this point. They're obviously, this is what I talk about with rule number 1. This is the rules will change. You think you know the rules. They announced a month ago that, oh, the repo market, it's only going to be this amount. It's only going to be overnight. And then, oh, here's 14-day terms now on these repos. And oh, now the balance sheet is expanding, the Fed's balance sheet, significantly. Before the Fed's balance sheet increased over $190 billion before the Fed officially announced its not QE program. No, what's next is not the Great Reset. No, we're not there yet. Something big has to break first. We need something big to break first, and then we need the chain reaction, the dominoes all starting to hit. We need the aftershock after the first earthquake. We need those things to hit first. So, like I said, it's going to be a question, this is just my opinion, of what will collapse first, and then what will be the corresponding effects after that. The dollar is starting to react to this, though. Tomorrow, was that autocorrect where you called me Josh? Also, I did try to start this live stream 5 minutes ago, and it was blocked. I hit the streaming button on my software, and YouTube blocked it, so I'm not sure why. Maybe it's my title with the New York Fed. It was blocked. I hit the button, and I was speaking for about 2 minutes, and my live stream software was saying that it was running and it was fine, and the YouTube software that's supposed to link to it for the live stream, it said it never ran. So who knows? That has not happened before. Malibu asked, Jason, can you explain why this is a problem? My understanding is this only an overnight loan. So it's only an overnight loan for normal repos, but then it depends on the collateral the Fed is taking. If they're taking bad mortgage-backed securities, if they're taking collateral they claim is not good, that they claim is good collateral, but it's really not. So the Fed used to only take U.S. Treasuries as collateral, and now they're taking agency debt and mortgage-backed securities officially. And some of those mortgage-backed securities can be pretty bad, but there's rumors going around, and no one has confirmed this. There's rumors that they may be taking collateralized loan obligations too. There's Alistair McLeod has written an article on this. There's been other people that have been speculating. Again, that's just speculation. It's just a rumor. There is no confirmation of that. But what I would also add is the 14-day term repos are not overnight. There are term repos too. And that is where you get into Jim Bianco's calculation, how in a single day, because of all the term repos that were renewed or new term repos, that the Fed did over $200 billion of repo in one day a few days ago. Actually, it was last week. Jim Bianco put out a really great chart saying that there was over $200 billion in repos done in one day when you add up the term limit repos that were done plus the overnight repos. And Jim Bianco said in a follow-up tweet, he is a very well-respected global macro guy. He is not a gold bug, and he is buying physical gold for himself and recommending it for clients on every dip. And he said that eventually this will matter to the Fed, and that the Fed is going to do many, in his own words, this is from his second tweet following this up last week, hundreds and hundreds of billions of dollars in QE. So the Malibu, the overnight repo is different than the term repo, the 14-day term repo, and the Fed is adding the term repo stuff to their balance sheet, and we don't know if the term repo the 14-day term repos are rolling off or not. We would only find that information out with a real independent audit of the Federal Reserve. We would also only find out with a real independent audit of the Federal Reserve if the Fed was actually taking quote-unquote good collateral, if they were only taking U.S. Treasuries. Okay? The Fed could be taking massive amounts of mortgage-backed securities. The information on the New York Fed website might not all be accurate. Call me shocked. I'm being sarcastic, okay? I don't want a one-page email. I don't want a one-page email saying, how dare you believe anything that the Fed writes, okay? I'm reporting on the official data, and then I'm on what the Fed tells us the official data versus the reality probably and the unofficial data based on a lot of circumstantial evidence. Oh, gold's manipulated. And if you listen to my podcast from yesterday, I talk about the companies like Franco-Nevada, Sandstorm Gold, and others who benefit the most from the paper price manipulation of gold and silver. I gave a lot away yesterday in the podcast for free. I got some really nasty comments under the comments section acting like I don't say anything good about some of the gold miners. I did an entire case study on Kirkland Lake Gold in the past, talking about how high grade it is, low cost, the exploration upside. Probably the best producing gold mine right now on the planet. William says eventually it will be 100 billion a day. William, according to this press release, it's going to be at least 120 billion per day starting tomorrow in repos. And we don't know what the collateral is. They're claiming it's treasuries. They're claiming it's agency debt on the New York Fed data website. And they're claiming it's mortgage-backed securities. Okay, well, that's it for this update right now. I want to thank everyone for their time. I want to thank my over 170 Patreon account contributors, almost 200. Hopefully in a couple months it'll be at 200. And my dozen or so monthly PayPal account contributors. Also want to thank people throwing me a tip once in a while. It's much appreciated. And keep liking the videos. I'll keep putting out unique content. This actually was unplanned, but who knew that the Fed was going to send out a crazy tweet, right? And announce this.